Bring in an economic expert and a voice many of you may recognize from social media. Adam Kobeissi is the founder and editor-in-chief of the Kobeissi Letter, which follows every move the market makes, including this one, and he joins me now. Adam, good to see you. I want to ask you, because the markets, they're clearly relieved that there is talk of a ceasefire. But tell me, what is making investors so confident that this is the beginning of the end?
Yeah, so, when over the last couple of weeks, we've been kind of going back and forth with, it was like a ping pong match, right? The U.S. would say something, Iran would reject it. Iran would say something, the U.S. would reject it. And we kind of kept going back and forth. So the market was really pricing in uncertainty, right? Beyond anything, like the market does not like uncertainty. The market likes certainty. The market likes to know what's going to happen. So this is really the first point in, the 38-day war where there is some sort of an agreement. I mean, the degree of which that agreement is really going to be fulfilled to is still subject to, a lot of different factors. But there is some sort of an agreement. And what that means is that what we call the geopolitical risk premium, right, which is this sense of uncertainty that is priced into markets is now being priced out. That's good for stocks. It's actually been good for gold, surprisingly. But that's good for bonds, but then that's also bad for oil prices, right? Because oil prices trade on supply and demand, and when supply is low, demand is high. Obviously, oil prices rise. Now that's being priced out. But it's important to note, before this war began in December, oil prices were at about $55 a barrel. Now even after these headlines, we're at about 95. So that's still about $40 higher than where we were before, and bringing oil back to the market is not something that just happens overnight. There's a long process, right? When these rigs shut down in what they call force majeure, sometimes it takes 3 to 6 months, if not longer, to restore production to its full capacity. So I think the market is still kind of going to see some volatility, and there's going to be some back and forth that still happens. But at its core, we're starting to price out uncertainty right now, which is bullish for stocks.
Well, one prominent economist said investors thought today was Taco Tuesday, and they didn't believe Trump's threat to wipe out Iran, because if they did, stocks would have been lower and oil higher. So, I mean, does this indicate that investors just no longer maybe are believing what the president says and looking at the certainty or unpredictability instead?
Yeah, so, it's interesting because stocks really, I mean, right now, even before this headline, the S&P 500 was only about 5% below its record high. It's up it's up a lot since last year this time. And the market kind of has come to this point where it views geopolitical conflicts or just general conflicts that result in volatility and downside in the stock market as something that is, in a way, limited by Trump, right? Because we've seen so many times in the past that when equities start falling, when stocks start falling, he always intervenes, right? And clearly that became the case this time, right? When the bond market, more particularly when interest rates were rising and oil prices were rising, President Trump started teasing these headlines of a potential peace deal. That wasn't a coincidence, right? The pressure, really what resulted in the ceasefire is pressure through markets. So markets had this notion that if we do reach this point where the market is falling so sharply, Trump will intervene. And simultaneously in the background, obviously this is a big macroeconomic headwind, but the whole AI narrative, the AI revolution as we call it in our work, is only accelerating. The largest 7 tech companies in the U.S. alone are investing $600 billion in 2026 alone in AI. That's a theme that investors can't look past. Even if oil prices are up, even if there's more volatility, people are looking at these tech stocks and saying maybe this is a time to buy these names when they're at a little bit of a discount for something that has less of an impact on tech than maybe people were pricing in initially.
I hadn't factored in AI and the role they would play, particularly in given on a day like this. I'm fascinated to think of what impact it could have. Adam Kobeissi, thank you so much.
Thank you for having me.